I watched a trader make more money in 6 months with one setup than I'd made in 3 years with dozens. Same markets, same time frames. But while I was juggling indicators and patterns and looking for the perfect confluence, he was waiting. Just waiting. Days would go by where he took nothing. Then he'd see his setup, enter without hesitation, and catch moves that most traders didn't even notice were happening. When I asked him to teach me his system, expecting some complex methodology, he drew 3 things on a chart. That's it. 3 elements. He said, "This is all I look for, and when I see it, I know something massive is about to happen." That simplicity felt insulting at first, like he was holding back the real secret, but he wasn't. The setup was the secret. And the discipline to wait for only that setup was the edge. Let me be direct with you right from the start. You're overwhelmed. Your charts are probably cluttered with indicators right now. Your head is full of patterns and rules and conflicting advice from different courses and books and videos you've consumed. You've learned dozens of setups, but you can't seem to execute any of them consistently. And worse, you keep missing the massive moves. The trends that run for weeks, the breakouts that double or triple. You miss them because you're either waiting for more confirmation or you're confused about which setup to use. And there's this specific pain you experience, analysis paralysis. You can see opportunities forming. You recognize them. But by the time you've checked all your conditions and confirmed your confluence and validated your setup against all the rules you've learned, the move has already started without you. Or you take mediocre trades that kind of sort of meet some of your criteria, even though deep down you know they're not the real opportunity. You take them anyway because you're in the market, you're active, you feel like you're doing something. But here's what trading education has done to you. It's convinced you that profitable trading requires sophistication, that professionals use complex systems with multiple indicators and intricate rules, that the more elements you have in your system, the better it is. But that's completely backwards. Complexity is a symptom of not understanding what actually moves markets. Simplicity is a sign of deep understanding. The common advice says find confluence between multiple signals to increase probability. Use moving averages and RSI and MACD and volume and multiple time frames and Fibonacci levels all together to confirm your trade. But confluence doesn't increase probability. It increases hesitation and reduces opportunity. Because by the time 5 different indicators agree, the move has already happened. The setup that catches massive moves doesn't need confluence because it's based on a fundamental market truth. When price structure reaches a specific configuration, the probability of a significant move increases dramatically, regardless of what indicators say. This isn't mysticism. This isn't hope. This is pure market mechanics. So today you're going to learn the exact 3-element setup that catches massive market moves. You're going to understand why this setup works based on actual market mechanics, not technical mysticism. You're going to learn how to recognize it instantly without analysis paralysis. You're going to experience the psychological shift from seeking confirmation to recognizing structure. You're going to get specific execution rules that remove discretion and hesitation. And you're going to understand why simpler setups produce better results than complex ones. Here's the unique insight that changes everything. Massive market moves don't happen randomly. They don't just appear out of nowhere. They happen when price structure creates a situation where one side of the market is trapped and the other side has control. This setup identifies that exact situation using 3 visible elements. No predictions, no indicators, just structural recognition. And when you adopt this one clean setup, the overwhelm disappears. You're not juggling multiple systems anymore. You're not debating which pattern is best. You're not checking 7 different indicators. You're waiting for one specific configuration, and when you see it, you act. That clarity transforms trading from constant decision-making into patient recognition and decisive execution. Let me tell you about my charts from 2009. If you could have seen them, you would have thought I was a professional. You would have thought I really knew what I was doing. Moving averages in 3 different periods, 20, 50, 200, MACD with custom settings, RSI, stochastic, Bollinger Bands, volume indicators, Fibonacci retracements, and extensions at every swing point. Multiple time frames opened simultaneously on different monitors. It looked sophisticated. It looked like the setup of someone who understood markets deeply. And I was convinced that all this analysis was giving me an edge. I genuinely believed that the more I could see, the better I could trade. That all these tools were helping me identify high-probability setups that other traders missed. But here's what was actually happening. I'd see a potential setup forming. Price would be doing something interesting. And then I'd start the checking process. Let me check MACD. Okay, MACD says yes, we're getting bullish divergence. But wait, let me check stochastic. Stochastic says no, we're overbought. Let me check RSI. RSI is neutral, sitting right at 50. Okay, what about the moving averages? They're crossed on the 4-hour chart, but not on the daily. What about Bollinger Bands? Price is near the lower band, suggesting oversold, but the bands are contracting, suggesting low volatility. What about volume? Volume is weak compared to the average. By the time I'd analyzed everything, checked every indicator, consulted every time frame, one of 2 things happened every single time. Either the trade was already running without me, the opportunity had passed, or I'd talked myself out of it completely because the signals were conflicting and I couldn't get the perfect confluence I was looking for. I was missing massive moves while staring directly at them. Not because I couldn't see them, not because I didn't have the right tools, but because I was drowning in noise. I had so much information that I couldn't make a decision. Then I met a trader at a conference who'd been profitable for 15 years, consistently profitable. Not just lucky for a few months, 15 years of making money. And when he showed me his charts during a conversation, I was shocked. They were naked, literally just price bars. No indicators at all, nothing. Just candlesticks or bars on a blank background. And he was catching moves I was missing. Big moves. The kind of moves I'd analyze afterward and kick myself for not taking. I asked him, trying not to sound condescending, how he knew when to enter without any indicators. How could he possibly identify setups without tools to confirm them? He looked at me like I'd asked a strange question. He said he didn't need indicators because he understood what actually caused big moves. And what caused big moves wasn't momentum or oscillators or moving average crosses or any of that stuff. What caused big moves was structure, price structure, the configuration of highs and lows that created situations where traders got trapped. He showed me his setup right there. 3 things: 1 type of price structure he looked for, 1 confirmation that control had shifted, 1 entry trigger. That's it. Nothing else. I was insulted. I'm being honest with you. I felt insulted. I thought he was oversimplifying to make himself look smart, like he'd discovered some Zen simplicity that made him superior. Or I thought he was holding back the real methodology and giving me a dumbed-down version, but I was desperate enough to try it. My complex system wasn't working. I was barely breaking even despite all my analysis. So I went home, and I did something that felt almost sacrilegious. I removed every indicator from my charts, all of them. Every moving average, every oscillator, every band, every volume indicator. Gone. Just price. And then I waited for his 3-element setup to appear. I watched my charts for days. Nothing. No setups. Just price moving around randomly from my perspective. Then finally I saw it. The 3 elements all present together. And it felt wrong. Too simple, too obvious. How could something this simple be the key to catching massive moves? But I took it anyway. I entered based solely on those three elements being present, and it caught a move that ran for 2 weeks. The biggest winner I'd had all year, from the simplest setup I'd ever used. So, what are those three elements? What is this setup actually looking for? Before I show you the exact components, you need to understand why it works. You need to understand the mechanics underneath. So this isn't just another pattern you're memorizing. Let me give you a metaphor. Imagine a mousetrap, not the violent kind, but a simple spring-loaded device. For the trap to work, 3 things must be true. Just 3. First, the spring must be compressed. Potential energy must be stored in the mechanism. Without compression, there's no power to create movement. The spring just sits there loose. Second, the trigger must be set. The mechanism must be cocked and ready to release the spring when activated. Without a set trigger, the compressed spring just sits there loaded but inactive. Third, something must trip the trigger. The activation must actually occur. Without that final element, without something physically triggering the mechanism, the trap never springs. The potential energy never converts to kinetic energy. Markets work the exact same way. Massive moves require 3 elements that are identical to this trap mechanism. And once you see this, you can't unsee it. You'll see it everywhere. First, compression. Price must be contained in a way that builds potential energy. This happens when price makes a specific structural pattern that traps traders on both sides. Bulls buying at what they think is support. Bears selling at what they think is resistance. The tighter the compression, the more traders positioned, the more potential energy stored. Second, a set trigger. There must be a clear level where, if broken, it proves one side has control and the other side is completely trapped. This is your confirmation, not from an indicator, from structure itself. Third, the trigger must be tripped. Price must actually break that level decisively, proving the trap has sprung and the trapped side must now exit their positions. Their forced exits create the fuel for a massive move. Most traders complicate this with indicators. They want RSI to confirm the setup. They want MACD to show momentum. They want volume to confirm the breakout. But you don't need confirmation from indicators. The structure is the confirmation. If the 3 elements are present, the probability of a significant move is high. If they're not all present, you wait. Now let me show you exactly what these 3 elements look like and how to identify them. Element number 1, the compression pattern. Massive moves don't happen from random price levels. They don't just start anywhere. They happen from specific structural patterns where one side of the market gets trapped. So the first thing you're looking for is a contraction in price range over time. This can take different forms. It can be a triangle where price makes lower highs and higher lows, converging toward a point. It can be a wedge where both the highs and lows are trending in the same direction but at different rates, creating convergence. It can be a tight range where price just bounces between 2 levels that get closer together. And it can be consolidation after a strong move where price contracts into a smaller and smaller area. The key characteristic is that price is making lower highs and higher lows simultaneously, compressing into a tighter and tighter space. You can literally draw converging lines on the chart and watch them squeeze together. Why does this matter? Why is compression the foundation of this setup? Because compression creates trapped traders. As price narrows, both bulls and bears are making decisions and taking positions. Bulls are buying because they see support forming. They think price is building a base. Bears are selling because they see resistance forming. They think price is building a top. The tighter the compression gets, the more traders are positioned on both sides. Everyone's committed. Everyone's in. Bulls at support levels, bears at resistance levels, and they can't both be right. When price finally breaks in one direction, everyone on the wrong side is trapped. They're in losing positions and they know it, and they must exit. That's not optional. That's not something they can avoid. Losing traders must eventually exit or get stopped out, and that forced exit creates the momentum for massive moves. It's their exits that push price further in the direction of the break because they have to become buyers if they were short or sellers if they were long. Now, here's what you're not looking for: random consolidation. Price that's just choppy without clear structure. The compression must show defined highs and lows that are converging. If price is just bouncing around randomly without creating a contracting structure, that's not compression. That's noise. That's not the setup. And here's a principle about time frame. The longer the compression, the bigger the eventual move. A compression pattern over 3 days creates a smaller move than a compression pattern over 3 weeks. This is pure mechanics. More time means more trapped traders, means more forced exits, means bigger moves. So if you want to catch massive moves, you're looking for compression patterns that have been developing over weeks, not hours. Element number 2, the control level. Once you've identified compression, once you've found that converging price structure where traders are getting trapped, you need to identify the level that proves who has control, the level where if price breaks, it proves the trap has sprung. In an upward break, this is the most recent swing high of the compression pattern. The highest point price reached while forming the upper boundary of the contraction. In a downward break, it's the most recent swing low. The lowest point price reached while forming the lower boundary. This level is absolutely critical because it's where the losing side admits defeat. Think about it. If bulls have been buying at support during the compression, believing price will go up, and price breaks below the swing low, they're proven wrong. Definitively wrong. Their thesis is invalidated, and they must exit their long positions. When they exit, they're selling, and their selling creates downward pressure that accelerates the move. The more bulls that were trapped, the more selling pressure gets released when the level breaks. That's why the move can be so explosive. Now, this is different from standard breakout trading, and you need to understand the distinction. Standard breakout trading looks for any break of a range, any movement beyond defined boundaries, but not all breakouts have trapped traders behind them. Some ranges are just ranges. People trading in and out, no strong commitment either way. This setup looks specifically for the break of a compression pattern where traders are trapped by design. The compression guarantees trapped traders. That's what makes it different. That's what makes it powerful. The control level doesn't just identify where to watch. It tells you that if price reaches this level in the context of this compression, the setup is valid. You don't need additional confirmation from indicators. You don't need RSI to be oversold or MACD to cross or volume to spike. The break of this level in the context of compression is the confirmation. Element number 3, the entry trigger. Having compression and a control level isn't enough. You need the actual trigger, the proof that the move is happening right now. And this is where most traders who understand the first 2 elements still mess up. What you're looking for is a decisive close beyond the control level, not a wick, not a temporary spike, not a quick touch and retreat. A candle that closes clearly beyond the level, proving that price is committing to that direction. Why does the close matter so much? Because wicks and spikes are noise. They're stop hunts. They're false breaks. They're tests of the level to see if there's supply or demand. A close beyond the level means something completely different. It means traders are willing to hold positions at these prices. It's commitment. not exploration. Think about what a close represents. It's where traders were willing to maintain positions when the candle period ended. If price spikes above a level, but then closes back below it, that's not commitment, that's rejection. Buyers tried to push it higher, but couldn't hold it. But if price closes above the level, especially with a strong candle, it means buyers are in control and willing to stay in control. The execution rule is simple. When you see a candle close beyond the control level in the context of compression, you enter on the next candle's open. Not during the closing candle, not trying to predict the close. You wait for the candle to actually close beyond the level, confirming the trigger. Then you enter at the open of the next candle. No hesitation, no additional analysis. The three elements are present. That's your signal. You act. Now here's the psychological challenge you're going to face. This entry will feel late. You're going to think it already moved. I missed it. I should have entered earlier. But you didn't miss it. You caught the beginning of a massive move. The small amount of movement you gave up waiting for the close is your insurance premium. It's the cost of making sure the setup is actually valid, because here's what happens if you enter before the close. Sometimes price will spike beyond the level, but then close back inside the compression. The trigger wasn't really tripped. The trap didn't spring, and you entered a false breakout that reverses on you. By waiting for the close, you avoid most false breakouts. You only enter when price proves commitment. Now let me explain why three elements are enough, and why adding a fourth or fifth element destroys the setup's effectiveness. Every additional element you require, every extra confirmation you add, volume confirmation, indicator alignment, multiple time frame agreement, it reduces the number of trades you take. And that sounds good at first. Fewer trades, higher quality, right? But what's actually happening is you're filtering out valid setups that would have worked. The three elements already provide complete confirmation. Compression shows you trapped traders exist. The control level proves which side is trapped. The entry trigger confirms the move is happening. What more could you possibly need? What could an indicator tell you that this structure hasn't already told you? And here's the hesitation cost. More elements mean more things to check, more time to think, more opportunity to talk yourself out of valid trades. You'll see the three elements present, but then you'll check RSI, and it's not quite where you want it, so you don't take the trade. Then the move happens without you. You had all the structural confirmation you needed, but you waited for technical confirmation that wasn't necessary. These three elements form a complete logical sequence. Compression without a control level means nothing, just a pattern without significance. A control level without compression is just a random breakout, no trapped traders to fuel the move. An entry trigger without the context of compression and a control level is just gambling on momentum, but together they form a complete picture of market mechanics. Setup, confirmation, execution. Everything you need, using one clean setup, requires a psychological shift. And this is where most traders struggle even after they understand the setup intellectually. You have to shift from seeking opportunity to recognizing structure. The old approach, the one you're probably using now, you look at charts trying to find trades. You open your platform and you scan through markets looking for something to do. This creates bias. You want to trade, so you start seeing setups that aren't really there. You force patterns to fit your criteria because you want action. You want to feel productive. The new approach, the one this setup requires, you wait for structure to reveal itself. You're not looking for trades. You're waiting for the market to show you the exact configuration. The three elements. And if they're not all present, you don't trade. No configuration, no trade. This removes discretion. It forces patience. And this is harder than complex systems in a weird way. Complex systems keep you busy. You're always analyzing, always checking indicators, always adjusting parameters, always feeling productive. You feel like you're working, like you're doing something. This setup requires you to do nothing until the three elements appear. Literally nothing. You just watch price move and you wait. And that feels uncomfortable. You'll feel lazy. You'll feel like you're not really trading. You'll want to take other trades just to be active. You'll want to analyze more just to feel involved. You have to resist that urge completely. Here's the 80-20 truth about this setup. This one configuration will likely capture 80% of the massive moves in any market you watch, but it might only trigger 20%, as often as all the other setups you were watching combined. That's the trade-off. Fewer trades, bigger moves, better results. You're trading less, but profiting more. Now let me give you the practices to implement this starting today. Practice 1. The chart purge. Right now, today, as soon as you finish watching this video, remove every indicator from your charts. All of them. Every moving average, every oscillator, every volume indicator, everything. Keep only price bars or candles against a clean background. This is going to feel uncomfortable. You're going to feel naked without your indicators. You're going to feel like you're missing information. That discomfort is good. It means you're breaking your dependence on noise. You're forcing yourself to see what actually matters, which is price structure, not colored lines. Look at clean price action for one full week before you even start marking this setup. Just watch price move without any tools telling you what to think. Learn to see structure with your own eyes. Practice 2. The pattern hunt. For the next 10 trading days, scan through charts, looking only for compression patterns. Don't trade them yet. You're not taking any positions. Just identify them. Mark them with lines showing the converging highs and lows. Your goal is to find 20 compression patterns across different markets and different time frames. This trains your eye to recognize element 1 instantly. After finding 20 patterns, you'll start seeing them everywhere. It becomes pattern recognition, not analysis. Practice 3. The level identification drill. For each compression pattern you found in Practice 2, go back and identify the control level. Where would price need to break to prove the trapped traders must exit? Mark it clearly with a horizontal line. This trains you to see element 2, the level that actually matters. Not random support and resistance lines everywhere. Not every swing high and low, but the specific level that proves control in the context of this compression pattern. Practice 4. The paper trading sequence. For 2 weeks, paper trade this setup only. When all 3 elements appear, the compression, the control level, and the decisive close beyond the level, mark your entry point. Track what happens. Don't analyze why it worked or didn't work yet. Just gather data. Just watch. You're building evidence that the setup works. You're training yourself to recognize it and execute it without hesitation. You're proving to yourself that 3 elements are enough. Practice 5. The one setup commitment. After your 2-week paper trading period, after you've seen this work multiple times, commit to trading only this setup for 1 full month with real money. If the 3 elements aren't all present, you don't trade. Period. Even if you see other opportunities, even if you're bored, even if you feel like you're missing out. This is the hardest practice because it requires saying no to everything else. You're going to see other patterns. You're going to see other setups you used to trade. You're going to want to take them. Don't. You're not restricting yourself. You're focusing yourself on the only setup that actually catches massive moves consistently. Let me bring all of this together now and show you the transformation. We started with you being overwhelmed, charts cluttered with indicators, head full of conflicting patterns and rules, missing massive moves because you couldn't decide which setup to use or you waited too long for perfect confluence. I shared my story of the indicator graveyard, how I had everything on my charts, how I thought complexity meant sophistication, how I was missing moves while staring directly at them, and how meeting a trader who used just 3 elements changed everything for me. Then I gave you the mousetrap metaphor, how massive moves require 3 specific elements, just like a spring-loaded trap. Compression that stores energy, a trigger that's set and ready, and the activation that releases the energy. Markets create these exact conditions over and over in every time frame. We broke down the 3 elements in detail. Element 1, the compression pattern where price contracts and traders get trapped on both sides. Bulls buying support, bears selling resistance, everyone positioned, everyone committed. Element 2, the control level where a break proves who's trapped and who has control. The swing high for upward breaks, the swing low for downward breaks. Element 3, the entry trigger, a decisive close beyond the control level that confirms the move is happening right now, not just testing. I explained why 3 elements are enough, why adding more destroys effectiveness through hesitation and filtering out valid setups, why these 3 form a complete logical sequence that needs nothing else. I walked you through the psychological shift required, from seeking opportunity everywhere to recognizing structure patiently, from staying busy with analysis to doing nothing until the configuration appears, from trading often to trading less but better. And I gave you 5 practices. Purge your charts of all indicators, hunt for 20 compression patterns to train your eye. Identify the control levels to understand element 2. Paper trade the complete sequence for 2 weeks. Then commit to 1 month of trading only this setup with real money. Now hear this clearly because this is what you need to carry with you. You don't need more setups. You need fewer. You don't need more analysis. You need more clarity. You don't need more indicators. You need to understand structure. This one clean setup catches massive market moves because it's based on market mechanics, not technical mysticism. Compression creates trapped traders. That's mechanics. The control level proves who's trapped when it breaks. That's logic. The entry trigger confirms the move is happening. That's evidence. That's it. That's everything. Stop searching for complexity and start executing simplicity. You're not missing some secret. You're not lacking some special knowledge. You're drowning in noise. You have too much information, too many tools, too many setups. Cut the noise. See the structure. Take the trade when all 3 elements are present. Let the market do what it always does when one side is trapped and must exit. You already know enough. You probably knew enough years ago. You just needed permission to stop doing everything else, to focus, to simplify, to wait for one specific thing and execute it perfectly when it appears. The traders catching massive moves aren't smarter than you. I promise you they're not. They're simpler than you. They found one thing that works based on how markets actually function, and they execute it relentlessly without distraction. They're not analyzing 10 different setups. They're waiting for one. And when it appears, they act without hesitation. If this video gave you permission to simplify, to cut all the complexity, to focus on one clean setup instead of juggling dozens, if something clicked for you about why less is more, hit the like button on this video right now. And leave me a comment. Tell me how many indicators you just deleted from your charts. I want to see you taking action on this immediately. I want to see you committing to simplicity right now, not later, not after you watch 5 more videos. Now, subscribe to this channel if you want more content that cuts through all the complexity and gives you clarity about what actually works in trading. Not theory, not complicated systems, just clear, simple, mechanical truth about how markets move and how to profit from that movement. The setup is yours now. The 3 elements: Compression, control level, entry trigger, the structure. The execution rules, everything you need to catch massive market moves. You don't need anything else. You don't need to learn anything else. You just need to stop doing everything else. Stop collecting setups like trading cards. Stop adding indicators like decorations. Stop searching for the perfect system. You have it now. 3 elements. That's the system. Start executing it.